Hello everyone, this is Oren from Financially Fit. Today we're going to talk to you about what type of trader you are, supply and demand, support and resistance, and trendline breakout. So the first thing we want to cover is what type of trader are you? Okay, number one, do you regularly put a trade with real money out of sheer boredom or inactivity in the market? Now, if you are doing that, I would tell you right now that is a recipe for disaster. Okay, if you are doing that, that's a recipe for disaster. Number one, the first thing you want to do is you want to set up your charts. Set up your charts on, either a day before, a week, doesn't matter. If you set up your charts, you can actually see what the market is doing. You're going to set your pending orders, whether you're setting a sell limit or a buy limit. You want to set your pending orders and wait for the market to reach your order. This is what we call setting and forgetting. Do not place trades out of pure boredom because that's a recipe for disaster. You see the market breaks out of a trend, and the first thing you want to do is say, well, I saw this breakout, I'm not doing anything else, so I'm just going to go ahead and place this trade. You place the trade and not realizing what the market's going to do next. It does a breakout, and you forget about the pullback. You're going short into a market with a huge lot, and next thing you know, you lost the trade. Okay? So if you're trading out of pure boredom, please stop. Do not do that. Number two, have you risked more than usual because your last few trades were losers? I've seen several traders do this in the past, where they lost a few trades and now they want to go into revenge mode. You lose a few trades and you want to go into revenge mode just to get your money back. You're not looking to profit. You're looking to make the money back that you just lost. Number one, we're in this industry to make profit, not to make what we just lost. Okay, so if you're losing any trade, doesn't matter how much you lost, if you're losing any trade, what I want you to do is shut the laptop down, close your computer, put down your phone, close out your MetaTrader or whichever app that you're using, okay? And before you place any trade, figure out why you lost the last one, right? If you have a losing trade, doesn't matter how much you lost, before you place your next trade, figure out why you lost that trade before you get back into it. Okay? Number three, have you decided to stop using something because it isn't working or it hasn't worked a handful of times you used it? So let's say if you're trading supply and demand, you know once the market hit that zone, it's going to drop down. If it's hitting a fresh zone, it's going to drop down. So let's just say it drops. You're in this trade on a short position, you're selling. In the market, something happens, market conditions change. You have to be aware that market conditions are going to change. So market conditions change, the market drops down, and news come out and shoots the market way back up. And you're saying to yourself, oh wow, but I'm trading supply and demand, and when it hit that zone, it's supposed to drop. Well, you have to be aware of market conditions. So let's just say it went up and hit that zone, the market hit that zone and was rejected. And you're saying to yourself, oh, wow, okay, I see what it did. It was going to do this. I'm not telling you to change your trading style or your trading strategy. Just be aware of market changes and market conditions, okay? Number four, has someone saying they've made a certain amount in a week and have you thinking that they're a great trader? Someone advertising their lifestyle. You have newbie traders, they see this and they want that. They want that lifestyle. They want to have a 40% or 100% gain per week. Now, let me tell you something. Most of you who are witnesses, they don't see what's going on behind the scenes. You don't see the losing trades. You don't see the stress that this person is going through. All right? You don't see. The one thing that you do see is that this person may have advertised that they're trading a 10 lot size. They're advertising that they're trading a 50 lot size, whatever lot size they're using. That's what you see these people are advertising. Okay, this is just an invitation to a presentation that they're offering. This is just an invitation to a presentation that they're offering. Okay, but what happens when you decide to market or partner with that person? When you decide to partner with that person, you're going to start to learn the truth behind how these people are really trading. Okay, I don't want you to go through that. I don't want you to learn the hard way. I want you to learn the right way. Okay, I want you to learn the right way. Okay, number five, have you thought about stopping for the day after a winner for fear of giving it all back? Now, I always tell people, if this is you, You must have a trading plan. All right, you must create a trading plan. So if your trading plan is to make a minimum of 50 pips per day, once you reach that 50 pips per day, shut it down. Shut it down. It's a wrap. Okay, once you reach that 50 pips per day, shut it down. It's a wrap. There's no reason to continue going, regardless if you saw the perfect setup. There's no reason. Stick with your trading plan. All right, stick with your trading plan. You cannot go broke by taking profit. All right, you would not be sitting on the sidelines with your finger up your ass wondering why you just lost the trade. Okay, number 6, have you moved a stop loss to break even for only the reason of thinking that, hey, I can't lose now. I moved my stop loss to break even. Well, that's the dumbest thing I've ever heard. I see people do it on a daily basis. Now, most people do it because they don't want to babysit a trade. They don't want to sit there and watch the trade. Well, if this is you, the only advice I can give to you, if you don't want to sit there and watch a trade, let's just imagine if you're up 50 pips. Imagine if you're up 50 pips. Regardless, whatever your lot size, you're up, you're in profit. The market comes back down and hit that stop loss that you recently moved to break even, you just gave all of that money back. Right? You just gave all of that money back. Now you're out of the trade. But here's something better. What if you did this instead? What if you set an alert to notify you when the market has reached a certain point? Instead of just putting a stop loss, what if you put an alert and the market dropped down, you're at 50 pips, and the market dropped down 10 pips? It can now notify you and tell you, hey, listen, the market is starting to do a reverse. You're now down 10 pips, leaving you with a 40 pip profit. What do you want to do? Do you want to stay in the trade, or do you want to exit the trade? Because once the market starts to reverse, you would now know how far it's going to drop down instead of giving all your money back. All right, guys, so that was our first topic of what type of trader are you? Next, we want to talk about letting a biased decision affect your thinking. Letting a biased decision affect your thinking. So, number 1, this is you right here. You're saying to yourself, I'm going to go long once the market does its breakout and retest right in the zone. Once the market does its breakout and retest in the zone, I'm going long. Well, guess what? You were absolutely right. The market did a breakout, retest, and went long. But once it reached a double top, all right, once the market has reached a double top, what happened next? You're saying to yourself, all right, this is going to be a temporary double top, and then we're going to continue going long. Well, the market dropped down, and you said, now you start to talk to yourself. All right, the market is going to bounce off of the prior support, and then it's going to keep going up. I'm not going to worry about it. It's going to bounce off the prior support. I'm not going to worry about that. The market continues to drop. You're still in the trade. You don't know how to cut your losses. The market continues to drop. Now you're saying to yourself, this is just a flush of those that bought the previous double bottom, and I'm not going to worry about it. This is just a flush. And now you're like, oh, fucking hell, I can't get out of here now. The market has dropped, putting you to a negative position. Shit, fuck. I mean, this is what the average trader does. I can't make this up, guys. If you are a trader, you've been through this before. If you are a trader, you've been through this before in the beginning stages of your trading. You've taught yourself to stay into a position, a losing position, until the point where you can no longer get out. It's either you're going to cut your losses at a negative 50 pips, or you're just going to wait it out and then continue to dig yourself deeper into a hole. Right? Next thing we want to talk about is the FOMOs. FOMO, FOMOs, the fear of missing out. Yep, that's correct, a FOMO, the fear of missing out. Now you're saying to yourself, all right, when the market gets here, we know that the market is dropping. We know that the market is dropping. We talked about supply and demand. When the market breaks out of the supply zone, I'm just going to wait for it to pull back. I'm going to have my pending sell limit, wait for it to pull back, and when that happens, I'm going to let the market do what it has to do to get me into this order. So you're standing there, you're saying to yourself, okay, it's time to sell. I'm waiting for my pullback. It's time to sell. I'm waiting for my pullback. So what happens? The market never pulled back. So you're saying, okay, come on, give me a pullback. This is going to be the short of the lifetime. This pullback right here is going to get me that brand new Rolex. This pullback right here is going to give me that lifestyle I want. But guess what? The market never pulls back. And now you're like, fuck, there's no way it's going to pull back now. So guess what's going to happen? I'm just going to go ahead and enter this trade to go short. I'm going to go ahead and enter this trade to go short because the market is not going to pull back now. I'm going to enter this trade to go short because the market is not going to pull back. So there's no reason for me to not just get into this trade. And guess what happens? The market pulls back. You're like, you son of a bitch. The market finally pulls back right where it broke out of. The market pulled back right where you had your original sell limit. Right where you had your original sell limit, the market pulled back for a nice sell. Because you were such a FOMO, a fear of missing out, that you had to get into the trade at the bottom of the trend. If this is you, if you're doing this, you don't have the patience to wait, set your limits, all right? Whether it's a sell limit or a buy limit, set your limits and do something else, all right? Occupy your time with something else. Do not chase the market. Let the market come to you. Now, there's only one group that never lose a trade. We call them the Facebook and social media ballers, right? We call them the Facebook and social media ballers. Yep. These people right here. These people that post up their profits on a daily basis. They never post up their losing trades. They never show the behind the scenes of what it took to actually make those profits. But guess what? It's people like you who are following this right here. People like you who are looking for results like that. And you would do anything. You would sell your soul to follow that person just so you can become a professional signal taker, a PST, a professional signal taker, just to get results like this. But guess what? Once again, these people are not going to tell you the real behind the scenes. Okay, how many trades they actually lost to actually make those profits? What strategies they actually took to make those profits? So my best advice to you would be to learn how to trade yourself. Learn why the market is moving in certain positions instead of becoming a PST. All right? You don't want to be a PST. I mean, yeah, these profits are nice. Yes, you would love to have those profits. Can you imagine having a $2,500 day, an $820 day? Can you imagine that? I don't want you to be a PST, and I don't want you to be a Facebook baller. I want to show you the lifestyle before the lifestyle, what it's going to take to actually make these numbers become a reality. All right, this is the behind the scenes of a Facebook baller. The truth of what a Facebook baller goes through on a daily basis before actually becoming profitable.
Okay, I just launched some AMRN right here off of this support right here. Bounced up a little bit past this 50 period moving average. Good thing this good chances think you go green, so you know maybe make a nice little chunk along with 1,000 shares. Let's see what happens with this thing. Okay, come on, just keep on moving. Shit, come on, man. Well, fuck, it's got some support right here, so you know maybe it'll hang on to this 16 area, bounce back up. Come on. Fuck! Oh shit! Oh shit, dude! What the fuck? I just lost 1,500 bucks. What the fuck? Oh shit! Oh no!
All right, so I want to show you guys 3 simple techniques or strategies that's going to help you become profitable. A trading strategy as simple as 1, 2, 3. Find the upward trend. Apply the trend line. Number 3, price action breaks downward through the trend line. Okay, so we're going to talk about right now, we're going to talk about breakout and retest. All right, this portion is about breakout and retest. We're going to wait for the market to break out of the zone, and then we're going to retest for our entry. So what we're looking for, all right, as you can see here, we had a nice breakout. We had a nice breakout off of demand. What is supply and demand? Once again, supply and demand is a large candle leaving a zone. A large candle leaving a zone. So as you can see here, we had a large candle leaving a zone. This was our breakout. And remember the horizontal line that we drew here? This nice horizontal line was interrupted. The market broke out of this horizontal line, did a breakout, and then as you can see what happened, the market came back down to that horizontal line to retest. All right, as we stated before, breakout, retest. The market came right back down to that breakout point and then just shot back up. Why? Because we re-entered that demand zone. I drew a nice big red box to show you that's our demand zone. And further on in this presentation, we're going to show you how to draw your supply and demand zones. So the market reached this zone here and just broke out and went all the way up. And now the one thing I want to show you as well, notice that when the market broke out of this zone here, remember it's breaking out of a zone, and then guess what? It retests that same zone. All right, you see how it retests the top of that box? Break out and retest the top of that box. All right, guys, so now as you can see here, we have a nice little breakout. Remember the main trend line that we have here? All right, this was the main trend line that we drew earlier. So finally, the market broke out of that zone. The market broke out of that zone, creating a huge supply zone. All right, the market broke out of the zone. Remember, supply and demand is a large candle leaving the zone. A large candle leaving the zone. So notice that the market broke out of the zone and hit our support area. It hit our support area, stayed in the zone, went into a consolidation. It broke out of the zone. This has become support and resistance. All right. When you see little small candles like this, it now becomes support and resistance. So the market broke out of this little support zone. All right. It broke out of that little support zone, and then it came back right to what we call resistance now. So we had a breakout, retest, resistance, and then the market drops. Breakout, retest, resistance, then the market drops. Okay, so now this is what I want to show you. So remember our original breakout, hitting the resistance and coming back, hitting the resistance, retest. Now as you can see, we had a nice little breakout, hit the resistance, retest, and the market drops down. All right, guys, so what I want to give you guys a little secret right here. All right, here's a little secret. All right, usually when the market breaks out of a zone, the first time, it's usually going to break out and retrace 50%. All right, it's usually going to break out and then retrace 50%. As you can see that the market did a breakout here. All right, it hit that resistance and then just shot down. All right, if you look at our original breakout shot all the way down and then it retests 50%. Breakout, retest 50%. The market then shoots all the way down. Now here's the next big Fibonacci level. After that market hit that 50% level, you notice how it shot down to the bottom, right? The next Fibonacci retracement zone is the 786. All right, so let me just break that down for you again. We have our original breakout, okay? As you can see over here, that was our original breakout right over there. See where it says breakout? That was our original, the first one. That was our original breakout. The market broke out of that zone and retest this zone right here. That's 50%. If you pull up your Fibonacci's, that's a 50% retracement. All right, once again, we have our original breakout, the first one that's up there. The market drops down, retest 50% of the breakout. And then the market drops down again. Market drops down again. Comes all the way back down to here. The market creates a nice inverted head and shoulders and then shoot up. Now here's a powerful breakout right here. All right, so you guys see the original breakout. Up there is the original breakout. Market shoots back up. Now, after hitting the 50% retracement level, it's going to the 786. The market is going to the 786 retracement level. Once it hit that level, once it hit that 786 retracement level, what the market does next, it's going to test it for a few hours, going to consolidate for a few hours, and then it's going to drop. Okay? All right, as you can see here, the market broke out of that zone. This was the 786. the 786 zone. It broke out of the zone. Now this is going to be the biggest drop. The first retest is just, just testing the waters. The market makers, they left a lot of money up there. These large banks and corporations, they left a lot of money up there. They were selling this, and you know what? We need to go back and get some more money. There was a lot of money up there when we were selling, and now we need to go back because, hey, we need to get it before those retail traders wake up. So the market, 786, boom, big drop. Huge drop to the low. Okay? Now, what happens? Market broke out of that zone, retest. Can you imagine if you had your pending limits set all the way over there, waiting for it to happen again? Now let's look at the market overall. So this way you can see what happened. This way you can see what happened, looking at the market overall. So what I want to show you is, what I want to show you is all the way over here was the original trend line that we created. We created a nice trend line, and then notice our first breakout. Notice our first breakout. We broke out, did a 50% retracement. The market dropped down. All right, we created a nice inverted head and shoulder. The market went back up to the 786, and then we had a huge drop. All right, after hitting the 786, we had a huge drop. And then guess what happened to the market again? The market came back up on a nice head and shoulders. The market came back up, hit a nice head and shoulder pattern. As you can see here, we have a shoulder, we have the head, and then we have another shoulder here. Then the market drops down. Now, like I told you guys, the second breakout is the biggest. Market goes back up to retest the second breakout and then drops down. It goes back up to retest that breakout and then drops back down. Remember, the second breakout is going to be the biggest. Okay, the second breakout is going to be the biggest. This is the 786, right? This is the 786 drop. Market drops from, actually, let me show you something. Over here was the 50%, and then we have the 786 drop. 786, all right, 786, then the market goes down and drop. 50%, right? We have to retest 50%. So we're going to retest 50%, drop. That's the first retest to the 786. Next, we're going to go up to the second retest to the 786, and look how large that drop is. Guys, I can't make this up. This is the actual market. This is the actual market. Now, can you imagine if you were to enter this trade from the first breakout on one standard lot? That's over $2,900 on one standard lot. All right, and this happened within 2 days. Can you imagine how your life would have changed within 2 days? Over almost $3,000 in 2 days. Okay, that's more than what most people make minimum wage, a monthly income. Can you imagine if you did this in 2 days, trading one pair, one lot? Okay, so now we're going to talk about supply and demand. Supply and demand is absolutely one of my favorites because it just makes trading so much easier. This is how we set it and forget it. Trading supply and demand. Okay, so as we explained before, we're going to tell you how to draw your supply and demand zones. Right, how to draw your supply and demand zone. So as you guys can see here, supply, we want you to capture everything. All right, everything that's in consolidation, capture everything that's within that zone. Once the market breaks out of that zone, then we want you to come over and set your limit order. We want you to set your sell limit right at the breakout. Sell limit order waiting at the edge of the zone. We want you to set your sell limits right at the breakout. Let the market come to you. Do not chase the market. All right? So once again, the market breaks out of the zone. Set your supply zone. We want you to capture everything that's in consolidation. Notice before the market breaks out, it's going to consolidate, capture everything that's in the zone, let the market break out, and then set your sell limit. Okay, I don't care if it takes 2 days, 3 days, set your sell limit. Once the market comes there, it's dropping. All right, once the market comes to that zone, it's going to drop, or if you're in demand, once it comes to that zone, it's going to rise. Okay? All right, same thing with demand. The same exact thing with demand. So what we're looking for a drop, and then a base, then a strong rally. a drop, a base, and a strong rally. When are you going to buy? You're going to buy on return once the market comes right back to this zone. You're going to buy on return once the market comes back to that zone. Okay, so once again, when it comes down to supply and demand, we're looking for a rally, a base, and a strong drop. A rally, base, and a strong drop. You're going to sell on return once the market comes back to this zone. You're going to sell on return once the market comes back to that zone. Now, most importantly, I want you guys to understand this. You have to realize how many times the market has reached that zone before actually breaking through. If you notice that the market has retested that zone a minimum of 3 to 4 times, then you have a decision to make. All right, you have a decision to make. If the market has reached that zone 3 to 4 times, you have a decision. Am I going to sell or wait for the market to break through? Here's the question. How many times will a market test a zone before breaking through? You want to see the market test a zone a minimum of 3 to 4 times before breaking through. Now, the biggest opportunity you have to that market actually selling on that supply zone is if it's a fresh supply zone or a fresh demand zone. Now, what does that mean? Notice that you have the market broke out of a zone. All right, you have the market in which it broke out of the zone, and it's retesting that zone for the first time. This is what we call a fresh supply zone. Once the market retests that zone for the first time, that's a fresh supply zone. Okay, so let's look at the market overall. Okay, you see you have a nice supply zone, and we have the market breaks out of a zone. The market breaks out of a zone. Now, again, here's the market. We're looking at a daily chart. Above, you see a huge supply zone, all right, huge supply zone. That market hit this supply zone. We want to know, why did the market fail? Why did the market fail from that zone? Well, as you can see here, this is a fresh supply zone. This is the first time that the market was up there. So it's a fresh supply zone. All right, the first time the market was up there. So now notice, what I want you to notice, this is the second time that the market was up there, so it drops. If this was the third and fourth time, trust me, the market would break through. So as you notice over here, why did the market finally break through this zone? How many times did the market retest this area before breaking through? All right, the market retests that zone a minimum of 3 to 4 times. Let's count it out. We have 1 test here, 2, 3, and then here's your 4th test before the market actually broke out. So we have 1, 2, 3, and 4. 1, 2, 3, and 4. Market broke through. Okay? Again, the market is going to retest this zone a minimum of 3 to 4 times before breaking out. Okay? Now, if you look at the demand zone, we have the same thing. Okay? Look at how many times this market tests the demand zone. We have 1, 2, and 3. All right? 1, 2, and 3. So, you know, when it comes back down, we already know what's going to happen. We have to make a decision. Is it going to break through, or is it going to continue to rally up? All right? So, we're also going to talk about indicators. My personal opinion on indicators, that indicators are lagging. Indicators basically give me a late signal to when I should enter the trade. But when using supply and demand, support and resistance, breakout and retest, me personally, I don't need to use indicators. All right, so if you want to get into the trade, I want you guys to start practicing trading without the use of indicators. All right, look at price. Price is going to tell you what's going on. Try to start trading without looking at indicators or following news. Now, if you just want to look at the news to see what's happening, potential market spikes, I mean, yeah, be my guest, take a look at it. You know, be my guest, take a look at it. But I don't want you to solely place your opinion on the news, because the news is just, to me, it's just going to push the market where it needs to go just a lot faster. So we were looking at a nice drop from the previous supply. When news happened, it's just going to push the market down a lot faster. The market was already going there. That's just my personal opinion. And honestly, my personal opinion, just me, I've been profitable using my personal opinion. Okay? So, once again, we're just going to wrap it up now. We're looking at the supply zone, looking for a supply zone. We want you guys to understand, when looking at the supply and demand, we're looking for large candles leaving the zone. Large candles leaving the zone. We're going to place our orders at the breakout. We're going to place our orders, our limit orders at the breakout. Wait for the market to come back, right? Wait for the market to come back to you and into your order. Okay, so once again, we have our first retest to our breakout. Then we see that the market comes back up on our second retest. But I want you to start learning these patterns that the market is creating. As you can see here, all right, as you can see here, the market created a nice head and shoulder pattern. We have a right shoulder here, and we have the head over here. And then as you can see now that the market created the left shoulder, and then the market dropped. Upon going back up, notice how the market creates a nice inverted head and shoulder. Market creates a nice inverted head and shoulder to take it back up to the top. All right, so where are you going to sell? Well, we mainly sell at the neckline. This is the original neckline of the breakout. Notice that the market drops down. Market drops down. All it's doing is just retest the previous breakout and then go back up to create the next head and shoulder pattern, which drops the market down again. Once again, this is Oren from Financially Fit. I want to thank you for joining us on this presentation, and hopefully you've learned what type of trader you are. So this week, I want you to start applying supply and demand, waiting for the trend line breakouts, all right? Eliminate the noise that's being created in the news. Eliminate watching others become profitable. I want you to stop following others and stop looking at others, let's say their profits. Stop looking at other profits and wishing that was you. Well, guess what? If you apply what you learned today, it will be you. So you don't have to become a PST, a professional signal taker. I want you to learn how to become a profitable trader, a consistent profitable trader. So once again, this is Oren from Financially Fit, and we'll see you on the next video.